makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Traders brace for results from Nvidia, the chip maker at the heart of the AI boom, reports later today. UK inflation cools less than expected last month, threatening to delay interest rate cuts from the Bank of England, and Israel recalls its ambassadors to Ireland and Norway after both countries, with Spain, said they would recognize a Palestinian state. So there is a lot going on today, both on geopolitical fronts, on the data front, and of course on markets. So this is what the European markets map is telling us. If you look at European stocks, they're falling after the latest price data from the UK seems to cast a doubt on hopes that price pressures have been vanquished. Now, again, we have seen this read across actually from what's been happening to the US to the UK, so it's not a given that we'll see the kind of same inflation dynamics, but it's very clear that after that data in the UK showed that inflation slowed less than expected last month, it's really raising questions about not only the Bank of England, but what it means for the rest of the world. I'm looking at US equity futures pretty much unchanged. Again, traders have also grown doubtful of the Fed delivering the 2 rate reductions that were priced in just last week, and then a couple of other things we're looking out for. Of course, there's volatility, there's copper also below, actually above 10,600, and then gold 2,417. Now, Wall Street is betting on blowout quarterly earnings from the AI leader Nvidia later today. The stock closed at a record high yesterday as investors look for evidence that the chip maker can actually maintain its explosive growth. Now, for more on this, let's bring in Matt Bloxham from Bloomberg Intelligence. Matt, I kind of have to often take a double take because this is one single stock and it's kind of, boosting the whole market as a whole. What are you expecting from Nvidia?
Yeah, so the focus is really on the revenue print and what they say about the forward guidance on revenue. If you think about it, that's like spectacular growth. The quarter last year, Q1, $7 billion of revenue. The same quarter this year, they guided to $24 billion, and the market's looking for a bit better than that, kind of closer to $25 billion. And then the expectation that that growth continues into next quarter. So the real focus number is going to be what they say about their Q2. The market's looking for just shy of $27 billion of revenue. So that would be about 100% growth year on year. So I think that's where people are really focused. And then beyond that, it's the commentary around what the demand pipeline is looking for. Most of their demand right now comes from a handful of hyperscalers, Google, Microsoft, Amazon, those kind of people. But they're looking to expand their business into the realm of enterprise and government. And they need to kind of continue to sell a convincing story about that demand coming through so that this kind of rapid growth we've seen can be sustained into the future and justify this kind of $2-point-something trillion valuation they have.
I mean, it's just crazy. The numbers around this are absolutely crazy because they must also have much more competition and rivals trying to take advantage of that.
Yeah, the competition's emerging. So their big customers right now, these hyperscalers, are all developing their own chips, which they'll sell alongside the Nvidia. So the Nvidia demand won't go away from them, but they'll be complementing it, and it will give them a bit more kind of buyer power against them in terms of pricing. And then you've got the likes of AMD that are also developing technology in this area too. So yeah, I think right now that they're still in a very good position from a competition perspective. But if you roll forward 12 months or so, that picture could look quite different. But Nvidia itself is trying to get into kind of a broader realm of offerings. There's potential talk about them developing CPUs as well as the GPUs, so GPUs, graphics processing units, which is their kind of territory. And if they do CPU too, it takes them into the realm of someone like Intel, and that could really change the whole kind of PC and technology landscape. So that's something for the future.
But Matt, what can they really tell us? So Matt is usually our AI expert. Today you're like our market expert because every corner of the market is looking at Nvidia. So what can they really tell us about the outlook?
Really, that insatiable appetite for AI product and technology is continuing, and I say it's this extension into enterprise and to government customers, and that actually, every company is looking at AI, and it's do they kind of back that up with big investments in their own technology, not just rely on offerings from AWS and ChatGPT and the like, and develop their own technology. That's kind of where the demand needs to come from.
Okay, Matt, thank you so much as ever for a great breakdown of what we can expect from Nvidia. That was Matt Bloxham from Bloomberg Intelligence. Also, our columnist John Authors put out a great story out today. Actually, his column is risk and title. As Nvidia goes, so do U.S. stocks. But he argues that it's really not healthy having a single stock to have so much of a hold on all of the market. Now, joining us to discuss, data, inflation, and the path ahead, Freya Beamish, chief economist at GlobalData, TS Lombard, and also with us, Fabrizio Pagani, partner at Vitale & Co. He's also former senior economic advisor to the Italian Prime Minister and former chief of staff of the Minister of Finance. So thank you, Fabrizio, for joining me in the studio.
Thank you.
Freya, welcome back to, of course, the Pulse. When you look at the inflation figures in the UK, and I know, Freya, you were looking at some of the modelling of what it means, for example, for U.S. growth going forward, but is there a danger that we have a similar pattern of inflation not really being quite there yet?
Yeah, I think before we kind of dive into the details, it does pay to just take a little step back and recognize that inflation peaked at above 10%, and it's now within 0.3 percentage points of the target. So that's a little bit of a moment to kind of, just take a little bit of a breather. I realize it did come in a little bit above expectations. But when we're looking at the leading indicators on services in the UK, we do see potential for continued disinflation there. And when we look at the bigger picture leading indicators, when we look at, for instance, monetary growth or monetary contraction, actually, which is what we've seen at the moment, that suggests that we could even see sort of an undershoot in inflation. So I think today's news is not what we're looking for, Freya, over the longer picture.
Yeah, but when you say, let's take a little bit of a breather, I mean, this has been in the pattern over the 7-8 months, actually, that markets are desperately looking for that cut and often are not really listening to what central banks are saying. So again, does this change your narrative, or is it just a lot more caution like we heard Governor Bailey say in the past?
Yeah, I think central bankers are very, very cautious because they've done all this research that suggests that there are two inflation regimes. There's non-linearity in inflation. Inflation is either high and volatile or it's low and stable, and nobody knows where the threshold is that kind of flips between those two regimes. But the other piece of research which has been received less attention, that was put out actually by the BIS last year in that context, is that monetary growth is also much more highly correlated with inflation in those high inflation regimes. And so if you've got negative monetary growth and your worry is that you're in a higher inflation regime, then you also must expect that inflation should be coming down as well, because money is correlated with inflation in a high inflation regime. So I think the likelihood is that the Bank of England has already shocked the system back into the lower inflation regime, which is not to say that they can kind of sit back and take things easy, because underlying those kind of big monetary shifts is a genuine imbalance in the labour market, which is nowhere more severe than in the United Kingdom. And that's the sort of the longer term problem that the Bank of England faces. But I think to sort of
Freya,
bring this back to what it... Yeah, sure, go ahead.
No, but staying with the UK 1 second, and then I want to get Fabrizio in also to talk about global inflationary pressures. But for the UK, we have an election, and so does it make it very narrow, the window of opportunity for the BOE to actually act?
Yeah, there's elections all over the place, so policymakers have to be a little bit careful. I think in reality, what happens is in the actual moment when the election is called, then policymakers are perhaps a little bit reticent to make big moves. But in the year of an election and kind of around an election, they make the moves that they think are necessary to make. But this does speak to a wider question of politics and the political shifts underlying the reaction function of the Bank of England and more broadly, because there is a labour market imbalance, and that's a political question of whether wage growth is allowed to stay higher in order to solve that imbalance, or whether the Bank of England should keep rates higher for longer to try to bring demand back down to wherever it considers to be supply. And that does become a political question, which that could undermine some of the central bank's independence if they continue to tread the path of trying to keep rates higher.
And Freya,
for longer.
let's listen. Yeah, let's listen to Governor Bailey, who was speaking last night about the next move being a cut.
As we've set out, I think that the next move will be a cut. As I've said, the question for us is how long we have to maintain this level of restriction.
That was, of course, Governor Bailey of the Bank of England. Fabrizio, it's a much clearer picture, actually, with the ECB saying that they will probably cut in June. Is that because they've communicated more effectively? I mean, it's pretty incredible to say that when you look at the Eurozone, it's easier to set monetary policy there than it is in the US or the UK.
Yes, I think, first of all, data are different. Not only inflation data, because inflation went down more rapidly in the EU than in other economies. And second, obviously, the status of the economy in the European Union is much different from the one of the US. So, for example, also from from an empirical point of view, you talk to managers and entrepreneurs. They don't raise inflation issues anymore, but they raise issues about growth. So there is a growth concern. Of course, the mandate of the ECB is price stability, but the economic outlook, of course, is very much part of that. And a testament of the independence of the ECB is, by the way, the fact that there is no really correlation and not even any political discourse about the European elections, which will come in June, and the decision which the ECB will take in June.
But will that, again, does that make a real difference to what you're seeing on the ground in terms of growth, in terms of lending? Freya also made a wonderful point about, wage growth and where that needs to be after the cost of living crisis that we've made.
There has been an erosion of the purchasing powers, particularly of the less wealthy families, and this is something which politicians and finance ministers have to take into account. I would say that the economy has also, there are major differences between the northern countries, in particular Germany, and southern countries, in which, it's a bit reverse. We see in Mediterranean countries growing more than the Nordic one.
And Freya, when you look at Europe, and I want to go back to some of your great analysis looking at soft landing in the U.S. and overcooked, but does Europe, again, we're underestimating maybe some of the policies that can be put in place post-EU elections, June 6. Does that make a material difference to then your potential outlook for European growth?
I think European growth, once the ECB gets out of the way, I'm actually quite positive on European growth. I think there are big structural issues, which Fabrizio was sort of alluding to there, with what's considered to be the core of Europe. Germany is supposed to be the locomotive, but it's very exposed to the shift in Chinese exports, the shift towards the greening of the Chinese economy, and the vast amounts of money that are being thrown at that sector, because Germany is a sort of an auto-centric economy. I think looking at growth more broadly, though, and looking to the sort of what's considered to be the periphery, I'm actually quite positive that once the ECB gets out of the way, that savings rates can come down. Savings rates look extremely high compared with where wealth ratios are at in terms of how much people need to save. You can argue precautionary savings should be a bit higher, but even so, it looks like there should be some tailwind there for the savings rate to come down. And I think also when you start to see real incomes recover, remember the European cycle is lagging the US cycle. And what we saw in the US was that once real income started to recover, productivity growth started to recover as well. And you get this kind of virtuous cycle kicking in. And the ECB, once it's gotten out of the way, and similarly with the Bank of England, once it's gotten out of the way, that virtuous cycle can actually start to kick in. And the worries that they've had over the structural deterioration, the supply side deterioration, productivity deterioration, are actually because demand is depressed, and not because of a very intense and long-lasting deterioration of productivity growth.
Freya, thanks so much. We'll be back with Freya and Fabrizio. Staying with us, of course, for more market insight, Fabrizio Pagani, partner at Vitale & Co, and Freya Beamish, chief economist at GlobalData, TS Lombard. This is Bloomberg. Welcome back to the Pulse, everyone. Now still with us, Freya Beamish, chief economist at GlobalData, TS Lombard, also with us, Fabrizio Pagani, partner at Vitale & Co, former senior economic advisor to the Italian PM. Freya, you have a note out, which is really well written, concise, and to the point about Nixon shocks. And basically, you argue in this that the U.S. and Chinese growth models cannot continue to coexist as they are. Are you expecting a change in the system, or is one country the winner?
I think I'm expecting a change in the system. I guess it depends how you define winner. I would bet on kind of US stocks over Chinese stocks, but I would bet on I would put my money into Chinese bonds before I would put my money into US bonds, depending on the hedging ratios. And I'm talking kind of longer term here. And that's because I think the US is shifting to a more sort of high pressure economy that'll be conducive to higher growth as well as higher inflation and capable of sustaining higher interest rates. Whereas I think that China is making, to cut a long story short, a lot of the same mistakes that were made by Japan. The schism comes in the realization that China is much bigger than Japan when Japan was making these mistakes in the mid-90s. So it's fundamentally impossible to get the Chinese current account surplus up without kind of deteriorating the U.S. current account deficit, and that's politically a major schism that the international monetary system is going to have to face. So the likelihood of some kind of an FX shock over the next next 12 months is quite high, given the likelihood that China will need to reduce its currency, depreciate its currency, and who's coming into the White House.
And Freya, I was going to ask you, I mean, does the FX shock, is it regardless, or is it much more exacerbated if Donald Trump is in the White House and, goes much harder on China than we're seeing now?
I think the dollar's place in the global system is being undermined regardless of who's in the White House. I think the likelihood of an outright shock is greater if Trump comes in the sense that he is going to tariff China. And he is then going to respond to tariffing China by saying that China is manipulating its currency, which is not exactly fair, but that's probably how he's going to respond. And that's going to remind him that he wants a weaker dollar, and so do all of his advisors. Yeah. So the likelihood of a shock from that side is quite intense as well. But even without Trump, the exorbitant privilege where the dollar is strong, both in terms of when the US is strong, but also when there's a global recession, is becoming seen as an exorbitant burden. So there's this move towards average inflation targeting. There's a move towards pro-cyclical fiscal policy, and all of these things gradually undermine the dollar, not to mention the search by EMs for a non-dollar alternative, which at the margin diverts funds towards the renminbi.
Yeah, Fran, many questions also for Europe. And you hear in the corridors of power in all major European cities trying to figure out, well, if Trump comes in the White House, is there any way of proofing your economy? Fabrizio.
But this will be a major geopolitical challenge for Europe from every point of view, economically, trade, investment, and of course defense. What we do with NATO, and what it will depend also what, of course, Trump will finally decide to do. But more generally, I think Europe is a bit at a crossroad, and the next Commission, the next legislation will test, the solidity of Europe in a world which is rapidly changing. So we need to define this strategic autonomy of which Macron speaks a lot, but we need really also a conceptual framework to define it, to interpret it. It will involve trade, investment, raw materials, but also internally.
Is there a commonality of people wanting to do that, or is it each party for their own?
No, I think there is a political discourse which is taking shape, in which France is pushing a lot, I would say, and in which Germany is probably more conservative in the sense that the pace of the change doesn't need to be as fast as France is proposing. But this will be really a matter for the next Commission. And you have interesting elements of that in the two reports of the Italian former Prime Minister, Letta and Draghi.
Thank you so much, Fabrizio. We need to get you back on to look a little deeper at some of these, of course, reforms put in place, or at least some of the competitiveness questions over Europe. Fabrizio Pagani, partner at Vitale & Co, and Freya Beamish, chief economist at GlobalData TS Lombard. Coming up, we talk BHP and its bid for Anglo. This is Bloomberg. Now, BHP has just hours to launch a blockbuster bid to buy smaller mining rival Anglo American, or put its audacious takeover plan on the shelf. Let's get more with Bloomberg Senior Executive Editor for Energy and Commodities, Will Kennedy. Will, this is crunch time. I mean, they either do it now or they don't.
That's right. We have a deadline at 5 o'clock this evening, London time, by which time Anglo American has to make a formal bid or walk away for 6 months. The other thing that could happen is Anglo American could ask the takeover panel for more time to consider the bid, but we've got no sign that's going to happen at the moment. So we don't expect BHP to make a hostile formal offer without some engagement. So we're waiting to see whether BHP offers a last-minute sweetener to force Anglo to the table, or whether Anglo shareholders force Anglo to engage with the conversation. So we'll know by the end of today.
I know, it's really exciting. So why will they not go hostile? And are we going to see other bidders come in?
I think they won't go hostile because that kind of bid doesn't work in this industry, and it will prevent them doing the due diligence that they need on the company. At this stage, there are only two other companies that could come in, Rio Tinto and possibly Glencore. I don't think anyone in the market expects it at this juncture. But Anglo American is going to change, and the mining industry will be reshaped over the coming years, for sure.
Thank you so much, Will, and everyone at our desk, 5 p.m. today. Will Kennedy on commodities. Traders brace for results from Nvidia, the chip maker at the heart of the AI boom, reports later today. UK inflation cools less than expected last month, threatening to delay interest rate cuts from the Bank of England. And Israel recalls its ambassadors to Ireland and Norway after both countries, along with Spain, said they would recognize a Palestinian state. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now let's get more on one of our top stories. Israel has recalled its ambassadors from Ireland and Norway after both countries, along with Spain, announced that they will recognize a Palestinian state. Now let's get more from Bloomberg Horizon's Middle East and Africa anchor, Jumana Bersace. Jumana, talk to us a little bit about what exactly we're expecting. It feels very significant because around the world, about 140 countries recognize, of course, a Palestinian state, but very few in Europe do.
Correct, Fran, and that is exactly the context. So this morning we found out that Ireland, Norway and Spain will be moving towards recognizing the Palestinian state, though the formal ratification is not set to take place until May the 28th. Significant even within Europe, because we know that the Spanish Prime Minister Pedro Sanchez for the last couple of months has been lobbying to get more EU member states on board. And up until now, Sweden is the only European EU country that has formally ratified the Palestinian state. The Norwegian Prime Minister is saying that there could be no peace in the Middle East unless there is a recognition of a Palestinian state. Very symbolic coming from Norway. You will recall that in the early 90s, it was Norway that hosted those Oslo Accords, which were the first attempt at putting together a pathway towards peace between Israel and Palestinian representatives, the PLO, at the time. But the reaction from Israel has been quite swift. They have now recalled their ambassadors to both Norway and Ireland, and they have threatened to recall the ambassador to Spain. The foreign minister has said that Ireland and Norway are sending a message to the world that terrorism pays, and that the recognition would indeed impede efforts to rescue the hostages that are still in Gaza.
Jumana, what can you tell us about the offensive on the ground in Rafah? So it seems that the U.S. has softened its earlier resistance to a broader military operation by Israel in Rafah.
Yeah, so this is a Bloomberg story that we put out overnight, Francine, and it is in the back of the U.S. National Security Advisor. Jake Sullivan did a trip to the region. He met with Arab leaders over the weekend. He met with several Israeli officials, including the defense minister, on Monday. And on the back of those meetings, it seems as though U.S. have started to soften their stance, their resistance regarding a potential offensive in Rafah that we've been talking about for the last couple of weeks. And it seems as though some of their major concerns regarding mounting civilian casualties and potential humanitarian situation on the ground have been allayed, namely because so many people have moved out of Rafah. It is estimated that around 900,000 people have fled Rafah in the last few weeks, but it is also estimated that there's still around 400,000 on the ground. So this was reporting from a U.S. official who spoke to Bloomberg and said that some of those U.S. concerns have been allayed. But whether or not Israel are actually going to go for that full-blown offensive is a big question. So far, they've limited it to the borders and the periphery of Rafah as a city.
Thank you so much, of course, for the update, Jumana there, Bloomberg Horizons Middle East and Africa anchor Jumana Bersetche. Now, you can also watch some of the live pictures from Tehran, where huge crowds are gathering ahead of the Iranian president's funeral later today. Now, earlier, the country's supreme leader, Ayatollah Khamenei, led funeral prayers in front of the caskets of the president, the foreign minister, and others who were killed in the helicopter crash on Sunday. Now, onto some corporate news, and China has signaled it's ready to unleash tariffs as high as 25% on imported cars with large engines. That's as trade tensions escalate with the U.S. and the European Union. So let's get the latest from Bloomberg's Ollie Crook. Ollie, tell us, first of all, good morning, but tell us a little bit more about some of these tariffs. I mean, how much does the U.S. actually sell to China?
Yeah, so this is the big story. Obviously, Biden came out with his tariffs from the Chinese cars going over to the U.S., and really the big story there is that, in fact, they don't sell many cars in the United States, right? But now the EU is sort of prepping their tariffs. They're going to release those in 2 weeks, and those are the cars that are coming from China into the European Union, and that is much more significant for China. So what China is saying is now, listen, if you do that, we are going to retaliate. We're going to hit these big engine cars, and a lot of these cars, the big, most highest margin cars that you see in Stuttgart from Mercedes-Benz, the big Maybachs with huge cylinder engines, those are made here and sent over to China. If you put a 25% tariff there, that is going to be meaningful. It's going to have a meaningful impact on their bottom line. I
mean, so Tesla is also, struggling with sales in Europe, but Tesla's big bet was also on China just a couple of months ago.
Yeah, correct. So Tesla has production both in Europe and in China, but actually a third or a fourth of the cars from Tesla that they sell in Europe come from China. So this is another one that's going to be caught in the crosshairs. And we just got this sort of monthly data from Tesla. Their sales are going down. They're actually losing market share here in Europe, particularly when they were used to be the only game in town. They no longer are. So they're sort of losing momentum here in Europe.
I mean, does this quieten down post-U.S. elections? Is it just like a tit for tat? Is it politicking, or are these tariffs left to say?
I mean, you think about it, right? You say there's a big contrast between Trump and Biden. However, on the sort of economic policy and a lot of the sort of tariff policy, it hasn't been that different. It feels kind of America first on some of the industrial and economic policy. I don't think that anyone in the White House that gets in, whether it's Biden, whether it's Trump, is going to go any easier on China. The question is, what is Europe going to do? How far are they going to follow the U.S.'s lead? And that is a question that they need to resolve, particularly since there's some disagreements on that, particularly between France and Germany.
Always. Ollie, thank you so much. Ollie Crook there with the very latest on some of these tariffs on the other side. Now, coming up, we talk elections, we talk EU elections. The far-right party of Marine Le Pen is on track to beat French President Emmanuel Macron's group in the European elections next month. While we speak to an MP from her party and discuss what it means for the EU's agenda. This is Bloomberg. Welcome back, everyone. Now, the markets are definitely moving on the back of that UK inflation figures. Let's bring you up to date with what's going on in the markets. Now, European stocks falling, bond yields actually rising. We had the latest price data from the UK, and it's just casting doubts on hopes that price pressures have been vanquished. Now, we spoke to Freya Beamish of TS Lombard. She said, look, we're maybe overreacting a little bit in the markets, but certainly these figures are reinforcing concerns that inflation pressures globally remain sticky. That could prevent central banks from easing policy as soon as currently anticipated. Now, in France, the far-right National Rally Party of Marine Le Pen has said it will end cooperation with the Alternative for Germany party in the next European Parliament. Now, it follows comments by an AfD lawmaker that appeared to play down the crimes of the Nazis. Now, cracks are starting to appear in some of the far-right groups that seemed on course to make major gains at next month's European elections. But the National Rally is still leading President Emmanuel Macron's group in the European polls by a double-digit margin. Such a result could have ramifications for some of the EU's biggest priorities, including defense and the climate agenda. So let's discuss all of this with Thibaut Francois. He's a French member of the Parliament for the National Rally. Thank you so much for joining us today. First of all, Monsieur Francois, how do you think Europe's far-right parties will actually do in elections in Europe 2.5 weeks from now?
Yes, hello, Francine. Thank you for your question. I do think that every nationalist party and sovereignist party in Europe are going to score. You can see that the progress of the Rassemblement National in France, which is now credited of 33% in the polls, is going to score. And we see that it's a sort of wave going all around Europe. We have seen what is happening in Hungary. We have seen now the PVV, which is our ally with Geert Wilders, is now entering the government. We also see that our ally in Austria is also winning these elections. We see the same in Flanders. So I do think that we can expect on the 9th of June to have waves of sovereignist party entering the European Parliament.
Can you talk to me about why you've broken ties with the AfD in Germany? So why do you think, first of all, they're moving further to the right? Is this to win votes, or is it just the complex of the party? And what does it mean for your alliances in the European Parliament?
It was very clear. We have seen the statement of the head of the list of the Alternative für Deutschland, which is totally unacceptable. He was playing down the role of the Nazi during the Second World War, which is definitely a red line for the Rassemblement National and for any other member of the ID group. So we decide very clearly, and our president of the party, Jordan Bardella, and also Mrs. Le Pen just state that in the next term in the European Parliament, the Rassemblement National and most probably any member of the ID party will not sit in the European Parliament with this party anymore.
So will you join the ECR, the Conservative Nationalist European Conservatives and Reformists?
But every doors are open, so now we clearly stated that we are not going to sit in this group with Alternative für Deutschland. And just for an explanation, the ID group is composed of 11 nationalities, so we are going to ask, and the ID is going to ask most probably for Alternative für Deutschland not to sit in this group anymore. And we see we have two options. The first one is staying and having a consolidation of the ID group in the next term, because we are still, we have the capacity to exist and to remain. And just to recall that the Rassemblement National is very likely to have between 30 and 33 members of the European Parliament, which will make ID group a very big group in the European Parliament. And other options also are the composition of either a very big group in the European Parliament with a fusion of two groups, the Conservatives, as you mentioned, and also the ID group. So every options and every doors are open. We are very pragmatic. We are waiting for the result of the 9th of June. And first of all, we are going to get focused on the national election. We have 20 days to win and to send to the European Parliament as many members of the European Parliament as we can. Yeah. And after the 9th of June, we are going to sit at the table with any other members to discuss about that.
But do you think that actually, I guess, these elections will be crucial for the French presidential elections in 2027? Will Marine Le Pen use this as a springboard?
Yes, these elections are a milestone, I would like to say. We used to call it in France a midterm elections, because these European elections that are going to happen on the 9th of June are really 2.5 years in the middle of the mandate of Emmanuel Macron. And we are clearly calling every single French that is unhappy of the politics of Emmanuel Macron to go and vote for us on the 9th of June. And you have seen that. We are credited of the double of the polls of Emmanuel Macron. So it's really a very clear message that we are sending. And you may know that Jordan Bardella, if we win and if we are the first one to this election, to this European election, is going to call for general elections in France. And we hope that Emmanuel Macron is going to go back to the people and ask the people and call for general election to have the opinion on the French people. And it's, of course, a step further for Mrs. Le Pen for the next presidential elections. And you might have seen also the polls. She's given in two options, winning at the second round of this presidential election. So we are working on that.
So you seem very confident, first of all, that you'll do quite well in the European elections and then maybe in the French presidential elections as well. How much of a reversal, if you're part of this broader, larger far-right bloc in Europe, how much of a reversal will we see in some of the policies put in place today? So, greening the economy, becoming the first climate-neutral continent by 2050, also giving support to Ukraine. How do you see those main issues changing?
We see that we are going to enter with not a majority, but a blockade majority in the minimum. So to have a blockade majority in the European Parliament, you need to have 135 seats. And I can already tell you that even if we don't stay in the same group, the number of members from the Conservative group and from the ID will be able to block some text from the European Parliament. We are also going to be able to raise and draft some motion of censorship to the European Commission. So it's very clear that now the European Commission is not going to work alone. It will have to listen to the voice of the people. And of course, one of the first things we are going to claim is to come back on the Migration Pact, for example.
Yeah, I was going to ask you actually, so are we going to see much harder border policing and drastic cuts also to migration after the bloc just approved this new bill?
Sorry, can you repeat it?
So the question is, how much will you focus on trying to change the green agenda, and how much will you focus on extra border controls?
For the border control, it's very simple. We would like to impose a double borders. So one national border, having some controls at the border is a necessity in France regarding the mass migration and the numbers of illegal migrants entering the European Union. And of course, we want also to have strong external border. I just would like to recall that the number 3 on our list is Fabrice Leggeri. He's a former director of Frontex. And of course, you have seen from the inside, I was working the Frontex policy and agency of the European Union. We see that they were most likely to welcome the migrant and not pushing them back. So we want to get back on that, which is a very important point. And you were asking a question regarding the green agenda of the European Union and the neutral carbon. For example, it's a madness. We have seen the decision of banning some fuel and gas motor for vehicles. It's unacceptable, because how do you do? I'm elected in a region in the north of France when you need to have your car, and how do you go to work? You have the necessity. No one in France is able to buy a new electric car, for example. So it will be a major point to defend the French people.
How much do you think Europe should support Ukraine going forward?
We will see what is going to happen. I think one of the major points will be what will happen in the presidential election in the United States. And we also are going to see what is going to... We have a very strong debate in France of the amount of money that is sent to Ukraine, the weapons and so on. And I think we should go back to the people and ask them what they really do want. Our party is, of course, in favor of supporting Ukraine, but we have some question regarding the amount of money which is sent, and also the work of the European Union. We are calling for an emergency meeting, for a peace meeting. We don't want to go in a third world war.
Can I also ask you, we're hearing that actually the Commission President, Ursula von der Leyen, is trying to shift a little bit to the right. Do you think in that stance she could get a second term? Would you be in favor for her staying on as Commission President after the elections?
We state already very clearly that we are not going to vote for Ursula von der Leyen. She was, over the course of the last 5 years, and I just want to recall that she was elected by 9 votes by the European Parliament. And I can already tell you that these 9 votes, the French delegation is probably going to get them. And we are not going to vote for Ursula von der Leyen. She was the one pushing a crazy Green Deal agenda of the European Union. She was the one pushing also the Migration Pact, and the French people doesn't want it. And in our alliance, very clearly, every single member of the ID group in the European Parliament says that we are not going to vote for this candidate. She might say that she's going to shift the majority on the right. We don't think she's going to do that, because she was working over the course of the last 5 years with the left, with the Greens and with the extreme left. So we don't believe any word of what she's saying.
Okay, at least that's crystal clear. Thibaut, Francois, thank you for joining us today, the Member of Parliament for the French National Rally. Coming up, we continue talking politics. We also talk corporates. Barclays could be requiring more U.S. staff to be in the office 5 days a week. We have the details next, and this is Bloomberg. Welcome back, everyone. Now, UK inflation fallen less than expected, fueling doubts that the BOE can actually start cutting interest rates. Now, consumer price indices rose 2.3% from a year ago in April, down from 3.2% the previous month. Now, the BOE and economists had expected it to drop to 2.1%. Now, for more on all of this, we're joined by Ven Ram from Bloomberg's MLive team. So, Ven, when you look at the inflation numbers today, does it delay or does it actually deter BOE cuts?
I think it should provide some pause for thought for some of the dovish-leaning members on the policy committee, Francine, because April, they had set a lot in store by April. We were supposed to get an inflation reading close to 2%, which is the BOE's projections for the spring were exactly 2%. The markets were expecting 2.1%, and we got a number much higher than even that. And if you look at core inflation and services inflation, both around 4% and 6%, that's kind of pretty much unchanged. So the question then is where is the room for the Bank of England to cut rates? If we are lucky, we could get one rate cut by the end of the year, but certainly the evolution of inflation suggests that the rates should remain higher for longer.
Yeah. But you're a great student, or you watch really a lot of the treasuries and all the market moves. And I wanted to ask you a little bit about gilts, but overall there's been a big move. And I don't know whether traders also look at the Bank of England numbers or inflation numbers and wonder what the Fed can do and whether they can cut as much as priced in.
Absolutely. I mean, this is rippling through all the markets here across the Eurozone, across treasuries, as you mentioned. You know, we started the year with 6 rate cuts factored in for the Fed. And now it looks like, you know, even one or two rate cuts. Markets are thinking whether even 1 or 2 rate cuts are a possibility. We have heard from Fed speakers this week that, look, that the neutral rate is higher. We have heard Loretta Mester saying that, look, she's not penciling in as many rate cuts as she was planning earlier on. So all that is weighing on treasuries and sentiment on gilts and Eurozone yields, and that's what we are seeing.
Van, what's the next data point, actually, that the BOE and that gilts will be watching for?
I think they're going to look at the labour market, and I think that, you know, the persistence of the labour market in the UK is extremely tight, and unless there is some cooling of that labour market, I don't think the BOE is going to be in a position to cut rates. Obviously, also crucial to the calculus is services inflation. At 6% now, it doesn't give any confidence to the BOE that, you know, the headline inflation is going to crumble anytime soon. There is a very strong correlation between services inflation and headline inflation. And with those services inflation, with that services inflation at 5.9%, it's hard to get inspired about a rate cut anytime soon.
Ven, thank you so much. As always, you can also follow Ven Ram and his colleagues on our wonderful live blog. He is a cross-asset strategist with our Markets Live team. Now, Barclays, amongst Wall Street firms, weighing whether to require more workers to be in the office 5 days a week. Now, it comes as U.S. brokerage regulators enact new rules for supervising work at home. Now, let's bring in our very own Tom Metcalf, Bloomberg's managing editor for finance and investing in the EMEA region. Tom, I looked at the headline and I said, what, people still work from home? I mean, I thought that was like done and dusted from finance world.
Yeah, look, I think when it comes to high finance, the deal makers, the traders, you know, broadly speaking, at the Wall Street firms, you might think of JP Morgan's, the Barclays. That's actually already happened. So it's interesting. There's obviously a subset of employees here who fall under FINRA, the US regulator, where perhaps there is still that flexibility we associate with the pandemic. And for me, this story is just a great reminder of there is sort of still within finance writ large a big division. You know, if you're at a retail bank, you've got a lot more scope to be working from home, and a lot of banks set their stall out as this is one of the big kind of almost, you know, recruitment attractions of us.
I was going to ask you, does that make a difference actually in talent retention?
I think for the firms that do offer it and can offer it, yes. I think, you know, when you're thinking of the traders, the investment bankers, I'm pretty sure those people are going in for those job interviews expecting to be in 5 days a week, certainly saying they're going to be in 5 days a week. So I think, you know, Wall Street, you know, high finance Wall Street, you know, you tend to see this whole work from home debate is largely parked for sort of, you know, particularly the kind of high flyers, high paid people.
Tom, as always, thank you so much. Tom Metcalf there, who manages our investing and finance team. Up next, Bloomberg Brief with Danny Berger and Manus Cranny in New York. We'll, of course, talk about all of the market action, but we also have quite a lot of corporate news, and then it's Nvidia Day. If you read one thing, there's a column by John Authors basically arguing that they've just become too powerful because everything hinges on what Nvidia says later. This is Bloomberg.